don't take profits. Now, there's a given level above gold that is about 3 to 5% above the high we saw this week so far. That if you get up into that zone, we'll pound the table. Do not take profits. That's been very popular for gold market analysts, quote unquote, to urge people to take profits in this rally. In fact, most of them have. And if you've done so, it's a good chance you missed what just happened. The last $200 in gold, the last $5 in silver.
Commerzbank silver and gold price predictions for end of 2024 and beyond. In the report released today, Commerzbank has revised its forecasts for silver and gold prices, offering insights into the precious metals market for the end of 2024 and beyond. While silver sees an upward trajectory, the bank anticipates a decline in gold prices in the second half of 2024. Commerzbank's latest report includes updated forecasts for silver and gold prices. Notably, the bank has raised its projections for silver prices for both the end of 2024 and 2025. The revised forecast places the ounce silver price at $30 by the end of 2024, up from the previous estimate of $29 for the end of 2025. Now expects silver to reach $32 compared to the previous forecast of $31. Conversely, Commerzbank foresees a decline in the ounce gold price in the second half of 2024. The bank predicts that gold prices will drop to $2,300 during this period. Now we'll show you more clips of the latest interview. Like and subscribe if you find value here, and let's get back into the episode.
Gold was in a 15% range for 3.5 years. I mean, wow, that's extremely narrow, extremely dull, and it bored everybody to death. Okay. Now, but during that time, the miners and silver, which had a huge surge into the summer of 2020, vastly beating gold in that surge, went into a downward gradual staircase. And which wore everybody out. Oh, it's never going up. It's, what am I doing here, et cetera, et cetera. And crossing above 31.5 area on GDX, which is a very popular mining ETF, we had a major trend resumption buy signal. Now, right now on a dip, it's trading at 36. It was been up to 37 plus recently. So since the February low, it's really exploded in percent basis. Same time, silver has had a major surge, and we had what we call a major annual momentum trend resumption signal. Not that we were in a negative trend, we were in a boring trend, okay, but it resumed and said, I'm awake, okay. And that price was just above $25, was our trigger number there. And of course, we've exploded since, percent-wise. And gold is obviously the mama market, so you always have to watch gold, but gold is now underperforming its miners and silver. In fact, I sent you some charts that you might want to share that show the top chart shows silver in relationship to gold going back to 2020 when we had that big surge in silver relative to gold. Therefore, silver outperformed. And as you can see on that top chart, since then there's been a staircasing zigzag decline in that performance readings by silver, meaning it was underperforming over the last 3 years or so. Well, that ended. That's over. That has had a major breakout in the last month or so. And it says, okay, now silver is back to an outperform mode versus the mother metal. Same is true with the gold miners. And as you can see on that, there's a downtrend channel that it was stuck in for the last 3.5 years. And it has blown through it as of a month ago. So the indications we've got from our annual momentum trend resumption, measuring silver by itself, gold miners, et cetera, is thumbs up. And when we measure the spread relationship, they're thumbs up. Now, what's the importance of the spreads? If you go back and look at the acceleration phases, particularly like in 1979 through 1980, prior to the 1980 peak in gold and silver, silver accelerated versus gold, okay? In other words, it did the same thing it just begun to do a month ago, which is to say, not only am I turning up, but I'm going to turn up more than gold. So we have technical reasons to believe, to argue, and we do argue and pound the table about it, that we are now in an acceleration phase in the monetary metals, and that the best place to be within that context is silver and the gold miners. And I think we're getting definite recognition from asset managers, too, that miners are a place to be. We've seen some big asset managers in the last several months position themselves in the mining sector, which is the most undervalued time in its history in terms of its relation to gold or in terms of its relation to the stock market. So it's a place to be.
In today's market recap, the silver price plunges below $31 amid Fed's hawkish minutes. Silver drops more than 3.50% after hitting a daily high of $32.19. Fed's hawkish minutes prompt profit-taking in precious metals, impacting gold and silver. Silver price tumbled more than 3.50% during the North American session after the Federal Reserve revealed hawkish tilted minutes that showed some officials would like to raise rates if inflation warranted it. Therefore, precious metals like gold and silver trimmed some of the weekly gains. Technical outlook. Silver's uptrend remains intact, but due to the speed and strength of the move, the gray metal was subject to a mean reversion move. The buyer's momentum has faded as the relative strength index was overbought and punched below the 70 level, hinting sellers to step in. With that said, first support would be the $30 psychological level. On further weakness, the next floor level would be the April 12th high turn support at $29.79, followed by $29. Now we'll show you the best excerpts of the latest interview, but first smash the subscribe button, hit the like button, and turn on notifications so you don't miss out our daily recaps. Enjoy the episode.
They both outperform and underperform, but they tend to outperform when the market's advancing solidly. And of course, for the last 3.5 years, gold's been not advancing. So therefore, it was time for the other guys to have a relapse. But now that we're net trend advancing again in all three categories, the two underdogs are now outperformers again. And this is the tradition. Well, like look at the summer of 2020 rally. Silver and price went from, we had a buy signal at $19.50. And several months later, it was what? $30. Huge percent move. Gold had a big move too. But it only went from like 1,450 to 2,000, so percent-wise, far less than what silver did. So it's typical during strong phases in the monetary metals on the upside that silver will outperform gold. And now, historically, if you look at an idiot price chart going back 50 years, let's say, monthly bar chart of gold, and you'll notice there was a high in 2011 at just below $2,000, $1,920. Then there was a high in 2020, in that summer rally, at $2,070 to $1,070. Okay, so $150 higher than it was 10 years prior. And then now we reached up to 2,450 recently. But we're emerging out above this gradually rising price pattern. But we're above both of those prior highs. Okay, look at copper. It's very interesting there. We know for the last couple of years that fundamental analysts in that arena have said, boy, we have a real tight supply problem coming up. In other words, there's just not enough production of copper that when demand hits, we're going to have a problem. And now all of a sudden you're seeing the technicals of it. Actually, we get a buy signal some months ago, but it's now merged above its two prior highs. One was in 2011 when it hit $4.60. And then the other one was in 2022, and copper hit just above 5. And then recently we shot up to 530. Now it's also accelerating out above its prior gradual ascending highs. And we have momentum reasons to argue that. And when you look at silver, well, what's its prior highs? $50. Okay, well, doesn't look like it's accelerating yet. Give it a chance. Give it a chance. And we think highly likely those two peaks at 50 over the last 50 years will be gone within months. What most technicians have done, and it's incorrect, is to take the last 3 years of context, their inhale, exhale pattern of the market, I'm talking the monetary metals now, and assume that's normality. And if you stand back and look at, again, look at a chart of gold or silver especially, go back 50 years, get yourself a monthly bar chart that's logarithmic scaled, ratio scaled. And look at the last 3 years on that chart, and you'll see one of the dullest little clumps of ink in that 50-year period of silver. So the inhale and exhale that we've seen since 2020 has been exceptionally dormant. And therefore, all the normalities that you apply, let's say you're using the typical stuff on your screen like RSI or MACD or Bollinger Bands, et cetera, they've had a certain normality for the last 3 years where, oh, you get to certain levels on each, oh, that's done. It's overdone. So you want to take profits. And sure enough, over the last 3 years, that's worked. But it's set people up for falsity. Because now we have a more dynamic situation where what your old norm overbought was, forget it. Overbought's going to be different now. Market's going to redefine what overbought is. And I don't think we've even reached there yet. I expect in the next year that silver goes ballistic, so does gold, in a way that is not just hundreds of dollars in gold or tens of dollars in silver, but much more over a much more compressed period of time. And I would expect maybe there'll be one good correction in that, let's say, the next year, where you get a horrible month. Okay. Not horrible 4 or 5 months, just a horrible month. Something to knock people off track. But we're not there yet. The kind of breaks we saw, what was it, 3 weeks ago in silver, where we dropped from a high at 29.80, somebody was selling just against 30, a brilliant technician. And we dropped a couple bucks. Most of that occurred in 3 days. And then you stalled the next week and then boom, blew out the high. Okay. So that was like a 3-day phenomenon, really. That's the kind of correction you're going to see going forward. So our expression of opinion to our subscribers was don't take profits. Now, there's a given level above gold that is about 3 to 5% above the high we saw this week so far. That if you get up into that zone, we'll pound the table. Do not take profits. That's been very popular for gold market analysts, quote unquote, to urge people to take profits in this rally. In fact, most of them have. And if you've done so, it's a good chance you missed what just happened. The last $200 in gold, the last $5 in silver. Don't get out of this market. We will try to define for our subscribers that one point we think will occur in the next, let's say, the next several quarters that might be worth exiting, especially if you're in call options, something very time sensitive. But if you're an investor in these markets, don't even think about taking profits. We're entering a phase now where the dynamics could be awesome. So, change your mentality. Last 3.5 years were deception.
What do you think of his take? Will profit takers regret taking profits? Will gold and silver meteoric rise continue? Post in the comment section down below your honest opinion for the price of metals. And if you liked this video, watch this one right here because it's a perfect fit for you. I see you on the other side.